So besides return, stability, and fees, which are the three main factors of a fund for you to look at, you should also consider a list of other things when you analyze a fund and decide if you want to buy this fund or not. And here we show you 5 other important things to look at. Even though from our point of view they're less important than the 3 main factors, but looking at these other things will also help you make a better investment decision. So they are the total net assets, the change of that total net assets of the fund, liquidity of the fund, the year-to-date performance, and finally the dividend yield. So what is the best way to use these 5 other additional factors? Let's start with the first one, the total net assets. The general rule of thumb is the larger the fund is, measured by the total assets under management, the more likely it's going to endure any market volatility, and the more credible the fund is likely to be. So with all things equal, you should always first consider a fund that is larger in size. And relating to the size, another important factor to look at is the change of that size. And the more positive the change is, the better the fund is likely to be. And conversely, if the fund is seeing large amount of outflows, that is a decrease in its total assets, then typically those are the funds you want to avoid. And here we measure that change as the difference between the fund size today versus at the beginning of the year. And as you can see here for this Vanguard ETF, the size of it is very large and the change of the size is very high, with the total amount of assets under management at $31 billion and the fund growth rate at 13% year to date. And if you want a simpler view, you can always click the collapse all so that you will only have the rankings view. Liquidity is also a quite useful factor to look at. It measures the traded value of this fund. So the more liquid the fund is, that is how easy it is for you to get in and get out of your positions by buying and selling, the more in favor the fund is to you. So here, as you can see, a lot of people trade around this ETF. That is why the liquidity of this Vanguard ETF is very high. And the average daily traded value for the last 30 days is $22.7 million every day. And also it's quite important to look at the average traded value for the last 52 weeks to see if there's any big difference versus the last 30 days average. And as you can see here, the average traded value for this Vanguard ETF for the last 52 weeks is at $23.1 million, which is very consistent with the 30-day average. And this is very positive to see because you want to avoid the funds that don't trade very liquidly. Because once you're in the fund and you want to get out, but there's lack of liquidity, it's very hard to do so. And you always want to buy funds with all things equal, trade more liquid than the others. And now moving on to year-to-date performance, it's quite similar to the returns numbers you're looking at, but here we show you the year-to-date. And the price momentum in general is a very important thing to look at in terms of investing. And typically you want to invest in something that has been doing consistently well over the long term. And here in this case, all of the year-to-date, 1 year, 3 year, 5 year return numbers of this Vanguard ETF is very positive, with the year-to-date number here at 17.2%, ranked very strong at 1052. And finally, if you care about income, you need to look at dividend yield. And for this Vanguard ETF, its dividend yield is at 1.13%, and of all the other 7,890 funds we look at, it's ranked very high at 1,570. So to sum up here, when you look at a fund, these are really the common sense questions you want to ask. That is, how well the fund has been doing, how stable it is, how much fees am I paying, all the things about the size, the liquidity, and how much dividend yield the fund is paying. So all of these things are very important contributions to the final decisions you want to make about a fund. And for this Vanguard ETF here, there are definitely more things for you to like about than the risks you want to be aware of. But by the end of the day, it's all about what type of investor you want to be and what types of funds you are likely to buy. Do you care more about the returns or the fees or the dividend yield? It's all coming down to your own investment style and preference.